Hello, Rick Komare, Certified Financial Planner, coming at you today with an article that I posted on my website called Tax Traps to Avoid in Retirement. And you certainly don't want to get stuck in a tax trap. So here it is, starting off with a quote. Our new Constitution is now established and has an appearance that promises permanency. But in this world, nothing can be said that is certain except what? Death and taxes. Who said that? Well, we recognize that quote from Ben Franklin, but he said that back in 1789. So how true he was. I mean, when we look at taxes, we've got federal, state, local, sales, property, gas, payroll, tolls, fees, taxes on capital gains, dividends, interest, gift tax, inheritance tax, cigarettes, and alcohol tax. And the list goes on and on. Well, with that, there are so many different ways that we are taxed. We need to be careful to not get stuck in any of the traps. The first one that I want to highlight for retirement is you may be required to make estimated quarterly payments for taxes. You see, if you've never been self-employed, the likelihood is that all your taxes were withheld from your paycheck for you on your behalf every single pay period, and you never had to mail in taxes. However, in retirement, that all changes, and you may have to submit payments on a quarterly basis because the IRS doesn't want to get paid just once a year. They want to get paid throughout the year. And if you don't have a paycheck withholding those tax payments, then you may need to go ahead and make those quarterly tax payments. You do have an opportunity to have some tax withheld from your Social Security income check. So take a look at that. Also from IRAs, often you can do a withholding from that. But with capital gains and dividends and interest, there is no withholding. So you got to work with your tax planner, your tax preparer, and make sure you have a good estimate for your quarterly payments. Second area is Social Security may be taxed. This is a surprise to a lot of people because you've already paid taxes on those dollars, but when you start receiving that income, they very well may tax it again. And this is hitting more and more people because these thresholds here, 25,000 and 34,000, well, those aren't indexed for inflation. So as time goes on, more and more people will have their Social Security subject to taxation. We could do a whole show on that. So we won't get into any more details, but if you have questions, feel free to let me know. Also, third and final area that we're going to talk about today is beware of the required IRA minimum distributions. When it comes to your own personal IRAs, the IRS says that when you attain the age of 70 and a half, not just 70, but 70 and a half, you are required to take money out. And if you don't do it, then they're going to tax you at 50% penalty on what you should have taken out. So you definitely want to make sure that gets taken care of. Again, if you have any questions about retirement planning, income, and taxes in retirement, and how to avoid all the traps, not just these three, feel free to reach out to me anytime.